As always, we are watching the cost of crude oil down just a little bit at $46.44 a barrel. Crude moving between gains and losses as investors wait on a special OPEC meeting this week. Member countries are facing declining prices despite production cuts. Joining us now is Oil Price Information Service, OPIS Chief Oil Analyst Tom Kloza, one of my favorite people on set, on the planet. Hey, good to see you.
Nice to be here.
So what's going to come out of this OPEC meeting? You said it's a compliance meeting.
Yeah, probably not much. It's like a procedural meeting where they all get together and escape some of their dirty little countries. And I think they're going to try to get Nigeria and Libya to agree to some caps. Those two were exempted when they had the original OPEC agreement that was carved out last December. The likelihood of those two countries agreeing to cap their production is pretty much close to zero. And it doesn't appear as though the Russians and the Saudis want to cut further. So we're going to be looking at a period of very weak oil prices, or about as weak as they've been, probably into 2018. And I would not be surprised to see 2018 prices be lower than 2017. So
where do you expect them to be next year?
I think we're in a long range of between $40 and $60. I think the short range is probably 42 to 47 or 48 for WTI. Going to really be difficult to get above that. Once you get around $50, you get a lot of folks that hedge and that lock in some of their production for the Permian or the Scoop and the Stack and some of the other U.S. plays. So this is an era of cheap oil that I think is going to last quite a while.
One of the biggest threats I think the market will see would be if the Saudis devalue their currency because the price of oil goes down and the dollar gets stronger. That's the biggest risk I see in the market. What do you think? Could that happen, and is that a real possibility?
Well, that's a risk. We've been talking about that risk for a while. The Saudis are looking at 2018 and the initial public offering of Aramco, which is going to be measured in trillions of dollars. So I would think that they'll do whatever it takes to make sure that that's a successful public offering. And if that means not devaluing the currency, maybe they won't do that. They've already ceded market share. I mean, they're going after market share in Asia, but they've ceded market share mostly to the United States and to Canada and to Libya and Nigeria. Now, Libya and Nigeria can always kind of fall off the map very, very quickly, probably about as chaotic countries as you can find. Canada, I think, is pretty solid, and we don't have to worry about warring factions in Alberta.
You know what? Go ahead, Lindsay.
Well, I was just going to say, you know what I find really interesting is you see energy stocks. They're down 13% year to date. You got oil prices down 15%. But the credit markets are really still open to these companies in the U.S. What's that tell you about oil prices? You got private equity coming in, giving them money to build new rigs.
Well, it tells me two things. Number one, it tells me that probably people still have false expectations that crude's going to go back to $60 to $80. That's number one. Number two, it tells me that there is a great distance between what some of the most efficient and well-capitalized countries can find oil for and have a break-even number, maybe $25, $28, $30 a barrel. Now, you'll hear a lot of CEOs say, oh, we need 56 or we need 70 or something like that, but they might need that to pay off alimony or something along those lines. It's not necessarily part of the production costs, and the costs are coming down, not just in the shale, but also in some of the big offshore projects.
So shale, they can make money at, what, $35 a barrel? I mean, it varies.
It depends, and it depends. If you have a lot of high debt, obviously it's going to take a lot of money to service that debt. Right. But a company like Pioneer that doesn't have a lot of debt, has some of the great acreage, they can, I think they said recently in a statement they can make some money at $28.
And they can export. Wow. I mean, we're going to export over 1 million barrels a day out of this country. The minute that happened, that completely opened up the market for frackers.
Let's talk about gas prices real quick. Where are gas prices headed? Because they're still on the decline. According to AAA, the national average is $2.25 a gallon. You're seeing sub-$2 gasoline in how many states right now?
Well, we're probably seeing them in about 22 states, and I think we'll see them in about 35 or 40 states after Labor Day. Gasoline demand is really strong right now. It's running probably around 9.7 or 9.8 million barrels a day, which is like 400 million gallons a day. but it drops by about 6 or 7% after Labor Day. So we're going to have real cheap gas in the fall. I mean, we really are. It's
how cheap?
Well, I think that even in New Jersey, where our gelatinous governor gave us a hefty gasoline tax in November, we'll probably see less than $2. And most of the country, with the exception of California and the West Coast, will see that as well.
And so I just want to point out, so Tom sits down and he says 53 days until the Giants play the Cowboys, and Lee looks at him and goes, "Who do you like?" And he almost fell out of his seat. He lives in New Jersey, so who do you?
The Cowboys are Satan's team. We all can agree on that.
Tom, good to see you.
Thanks.
Tom Kloza. Thanks for bringing good news, though. We like cheap gasoline prices.